Hey everybody, Courtney Smith here with our January 2nd edition of Wall Street Winners, ready to get going for another great year. I think this year is going to be much better than last year because this year it's not going to be a bear market for the whole year. We're going to have some swoons, but they're only going to be short-lived. Let's get going here. So S&P, we've stabilized quite a bit here. And actually, if you look closely, you'll notice that we didn't make a lower low here, but we did make a lower low here. So this is a mini bullish divergence between the purple predictor and the price action. So it's a little teeny bit bullish, but let's keep going through our indicators before we come to a conclusion, because I think we might still have a little bit more to go on the downside. But nonetheless, this shows that probably this week we'll not see a lot on the downside. Over here, we see selling pressure remains stable but higher. Buying pressure is declining. The Santa Claus rally did not show up really, so let's carry on. We have the same kind of divergence here with the NASDAQ slipping a little bit, although really over the last week it was quite stable, and the purple predictor held up very well as well. So once again, looks like we're going to be kind of a little bit stable here. After that, we might get a little bit more of a dip. Seasonals, not even close to giving us a buy signal. Now, last year, the red line, well, let's not use the red line. What they're saying here is we're in a pre-election year. And pre-election years are this black line right here. So as you can see, it's very, very bullish. Now, this is the first term of President Joe Biden, and that would be the blue line. Also very bullish. Pre-election after a midterm bear, even more bullish. Now, if we put everything together, it's the red line. But right now, I think we really have to take a look at all of these three up here are basically the same. It's just going to be bullish, bullish, bullish the whole year. And in particular here, look at the month of January. Very, very strong. And this is one of the reasons why I don't believe we're going to break to new lows, is because the seasonals are here. So we bottom out in October, as I showed you the day after the low. We rally up. Now we have a little bit of a swoon to get everybody thinking that the bear market's back in action. This is the classic wall of worry. But we're going to take off. Here we're seeing monies coming out of the bond market, and that's helping support the stock market. Our risk indicator, though, slipped a little bit. Well, let's call it basically stable. They're going to stay in the value stocks, the boring stocks, the strong balance sheet. We've been in these for months, months and months and months. It is not time yet to go back into the high-tech stocks at all. The market doesn't want risk. It's going to reward you for not taking a lot of risk. So that's where we need to be in our portfolio. Global shares are holding up extremely well, much, much better than the U.S. market, and I think that's going to continue here. You can almost think of global shares as small cap shares, which tend to do well in January. This is kind of the peak of outperformance of small cap stocks compared to big cap stocks, mega caps. Here we can see the yield curve starting to move back towards a more positive level. This is microscopically bullish for the stock market, but nonetheless, we're going to have a big and long bear market coming up. Go to my YouTube channel. Watch the videos that I've put up there. I put up one on the Fed. I've put up one on the economy of what's going to happen in 2023. This is your roadmap to profits, so go take a look at it. Bonds coming down, but I think we're going to stabilize now. We're not going to go make a new low or anything. Look for some stability this week. It's already started, and it should continue. But the overall picture is higher interest rates, which means lower bond prices. So a little bit of stability this week, and then the bear market's going to continue. Dollar. Now, this is interesting. If interest rates are going up, the dollar should be strong. But look, it just broke to a new low, mainly on the back of a sharp up move in the yen. So keep an eye out on this. This should be turning around and going up with the higher interest rates, but it's not. So that's a big sign of weakness for the dollar. If the dollar is weak, that means that gold must be strong. And as you can see, we are getting that sluggish bull market that we've talked about. Our key indicators are now all three are bullish. So we got to get long some gold in here. Crude oil, I think, is also going to grind higher, but it's not going to really go back into the kind of bull market we saw last year for the simple reason that the recession is going to keep cutting and cutting and cutting the demand for crude oil. So there's a lot of bullish factors out there. I think that they're going to fight to a draw. We're going to see supply shrink a little bit more. And at the same time, unfortunately, we're going to see demand drop as the recession gets worse and worse. And it is going to get worse and worse. We've barely just begun. Bitcoin, I think you can see here the purple predictor. Look at this. It's gone from here straight down. Now, at the same time, the purple predictor, which is on balance volume, is telling us that the smart money is selling. Bitcoin's been pretty stable, which tells me it's about to crack down. And the only question is it going to stabilize above these lows here, or is it heading straight down to sub 13,000, which is my next objective on the downside? All right, everybody, a short one today. Not a lot of action. We need to get this market getting in one direction or the other. But anyway, it's freebies. You know what to do. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E-table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.